Hey guys, this is a market update. There's no two ways around it. If you are looking at the Bitcoin cycle and going from previous cycles, you need to sell now and need to get out because this is the top. 350 days, 500 days, 550 days, we're right here, right? So if we go on to new all-time highs, this is going to be the longest, latest cycle top ever. And there's a lot in the macro that suggests that could actually happen. But you also, if you're in trades or looking at trading cycles, you also have to just admit that this is usually when we top out, which is why I think you're getting a lot of uncertainty in the price action here. So we'll go over that and then some of the actual real world macro happening right now. I've updated the crypto course. If you've got it, these are free for you, so go and watch those. I'll put a 20% discount link in the description. If you type BTC at checkout, you can get 20% off. You can find the details down below. But look, this is not good price action. A whole year we've gone sideways, right? And that's annoying, right? Because a sideways year in the third year of a bull market is, very, very unheard of. Also, what is going to push us to new all-time highs? The banks are saying 150, 200K this year in 8 weeks. That's not going to happen, is it? We're not going to go 100% or even 80% in the next, 10 weeks or something like that. Very, very unlikely considering this. Now, there's a lot in the macro that could change very quickly because you're seeing weakness now. You're seeing the first signs of some stress in the banking system, some illiquidity there. And we know how fast the Fed can change on these things. We know that they're going to end QT. They could move very quick. That could all happen very quick. But that's what we're relying on now, right? Because look how much has already flowed into this market. Bitwise is saying, well, this is the best year ever, right? 40% more public companies holding Bitcoin. You're talking about tens of billions that have been, bought of Bitcoin. You're talking about the ETFs being the best performing ETFs ever. And the inflows this year have been similar to the S&P. That's fantastic. Are they going to do that again? Are they going to do that times 2 to make us double in price? Because we've had the literally most, it couldn't have gone better, right? The best performing ETFs in the universe ever, right? And these huge inflows, and we basically have gone to 100 and just stalled out. Where is the next lot of money coming from to push us up higher? So I get the indecision. And for me, trading on my trades, I'm not going to sell Bitcoin this cycle, my spot Bitcoin, but for trades, you have to consider this. So that's what I'm considering very strongly right now is, look, how much is left, right? Now, there's a lot in the macro going on that I think is quite positive. But look, this is the problem. These are the DATs or the digital asset treasuries. These are Bitcoin treasury companies. Nakamoto is a complete disaster. This thing down 97, 98%. Those are drawdowns that most of the time you don't even recover from, right? To get back from a 97% drawdown is basically impossible, almost. If you look at Metaplanet, this thing is actually negative, right? Minus 80 odd percent. Strategy is down, but it's 20%. It's not that bad, to be honest, right? So the problem is that the money flowing into these companies, which are the biggest buyers of Bitcoin, are just out, right? The stocks are getting sold off. And that's an issue because where is the money coming from? In order to push Bitcoin higher, you need fresh capital coming in. You need new money coming in. We had the ETFs and we had these treasury companies. Treasury companies are getting sold off. That's not good because the year-over-year change in the rate of Bitcoin purchases, if that goes down, the price goes down. It's all about rate of change, right? This is an issue. If you look at short-term holders capitulating again, you can just see that above my head, right? So short-term is really, really bearish. And that's not bad when you're lower in price and when you're earlier in the cycle, right? If you're at 30K, 40K, and you get short-term capitulation and things are bearish, it's like, it doesn't matter, right? We're early in the cycle, just buy. When you're up here and it feels like the monthly kind of breaking down a bit, it doesn't feel that great. So yeah, I think there is absolute cause and reason to be very uncertain here because everything is pointing towards just where's the money coming from to push us to 200K, right? And where is the fresh capital coming from? So I get it. And I'm having to seriously consider getting out of trades here. But let's look at the macro. The extended cycle theory then suggests that because debt was termed out during the pandemic, the average duration went from around 4 to 5 years. And so you just get this longer central bank cycle, which would put us somewhere around mid-26. And the other issue is the market, Bitcoin and the stock market, can price in the potential of lower rates by just bidding up prices, right? So you've seen the stock market price to earnings have risen, right? And that's what happens. I've showed you this in previous videos where the price goes up. So the price to earnings ratio goes up first because people price that in, and then the earnings catch up to reduce the price to earnings rate, but the price still goes up because it's catching up. That's happened. We've had the price to earnings expansion. Now we need the earnings expansion, but that can't happen until rates actually come down. The stock market can only price in so much forward until you actually physically need the rate to come down. People can't refinance when the 6 month is at 4%, right? So that actually physically needs to come down, and it hasn't yet. And we know that Bitcoin trades off of central bank policy. So we know they're cutting interest rates. They're so late, they're so slow, it's unbelievable, but that's where we are. And so that's pushed this cycle out potentially. This has to happen because you need that flow of currency. And currency creation can't really happen too much until the rates are lower, until people are actually incentivized to refinance, right? So that is actually a very strong case. If you look at the 10-year is saying that inflation expectations are coming down and not going up. You can see a downtrend here, right? And so we're actually breaking down. We're now under 4% on the 10-year, which is a totally normal percentage, right, on the 10-year. Maybe it comes even lower. So we are waiting for the central bank to actually move, and you can't create currency until the interest rate actually gets there, right? Maybe they move way faster than we think. We don't know that. That's uncertain again. So yeah, it's very, very uncertain right now. People are uncertain. And of course, you get capitulation around that. I have to look at this very closely, right? Because we are at the top of the 4-year cycle. However, the macro data is suggesting that this is going to extend a little bit. So it's a very important time. Inflation swaps, you can see, are all coming off, right? So people are not expecting high inflation. And if that's the case, then the central bank has to move, and they're just so slow. It's unbelievable. But look, that's what they're doing, and that's fine. Shutdown may start costing the economy $15 billion a week. That's very, very important. There's no legacy media coverage of this. But look, $15 billion a week, government shutdown. When is that going to open? This is not bullish right now, this second. This is not bullish right now, this second. However, if you look forward and say, well, they are going to open it again, GDP can pick up again, this is going to affect GDP negatively. Bitcoin is extremely sensitive to that. So it's to the downside, very sensitive, but also to the upside if they actually open this thing and get things going again. You can see the credit cycle, right? Halfway through, 50%. Bitcoin reacts to the credit cycle. Bitcoin is part of the credit cycle because we value it in dollars. Have to look at dollars and dollar creation. We're trading the credit cycle here. If you're investing in Bitcoin, great, 10-year time horizon. If you're trading cycles, you're not trading Bitcoin. You're trading the credit cycle. You're trading the dollar cycle, right? 50% here. We have priced in as much as we can, I think. Now it actually has to happen. You actually have to get rates down on the short end, and rates have to come down. They are coming down on the long end. You have to get currency creation. The Fed are stopping QT. They're just so slow. It's unbelievable. But as long as they're pointing in that direction, then I think the cycle is going to remain fairly robust. You don't get a bear market if the Fed is cutting interest rates and trying to be stimulative. Now, the other thing is the Fed going to wait so long? Because they're still at 4%, right, on the overnight rate. Are they going to wait so long that you get, because I've seen some things about banking stress in regional banks and everything like this. This is the start of something that, usually kind of snowballs a little bit, where you say banking stress here, banking stress there, the Fed has to come in. And if the Fed comes in, makes things a bit more liquid again, you get another pump, right? But in the meantime, if they don't, and you get banking stress, that's when markets panic and come off again. That's why you have to use low leverage, because you can drop 30, 40% in a bull market. Fed comes in, liquidity, everything pumps again. That's short-term liquidity. But for this cycle, as long as the bank is facing towards more dovishness, I have to remain more dovish. I go off the central bank, I'm trading the credit cycle, not Bitcoin. Short-term trades, trading the credit cycle. This credit cycle cannot go up to the top. ISM and the manufacturing cannot go up to the top unless rates are actually lower and businesses do actually refinance, and the government as well, right? So we have to wait for that. So that's where I am. The 4-year cycle is mature, but I have to focus on the macro, because for my trades, I'm trading the credit cycle and not actually Bitcoin. The way I read the market over the last few years is that Bitcoin's had its own specific thing. ETFs, favorable regulation, Trump winning. That takes us from 30 to 100, and there you go. We've gone sideways because rates are still 4% and the Fed is still doing QT. So they're not helping us out. They're going to stop QT, they've said that already, and they're going to lower interest rates. Okay, that's great. We have to wait for that to happen. And that's a more dovish environment, which is good news. What we don't want to happen is some sort of panic in the banking sector or anything like that. The Fed will react to that. But in the meantime, Bitcoin goes down 30, 40% and everyone says we're in a bear market. But then the Fed reacts and we go to all-time highs again. Just don't get liquidated on that. That's the whole thing, is don't get liquidated on one of those stupid drawdowns, because then 6 weeks later, the Fed comes out and everything's at an all-time high again, right? So don't get liquidated. Just hold spot or very, very low leverage trades. But if we're coming into more dovishness from the central bank, then that's fine by me. And that pushes me to keep my trades. Positive macro surprises. The economy is picking up. You can see that here. The cycle is picking up. This is good because if you look at this is from Julian Battelle. ISM, Bitcoin is very highly correlated with the ISM. And then you're looking at S&P 500 net 12-month forward EPS upgrades, so earnings per share upgrades. You can see that happening here. It's very, very highly correlated to the ISM. So if earnings upgrades are very good, and we're seeing that, a lot of banks came out beating their expectations. ISM can pick up. That means credit creation against the ISM pickup. Credit creation means decent for asset prices and Bitcoin. Bitcoin very highly correlated. So there is a lot of forward-looking stuff that looks really good. But Bitcoin's late in the cycle, right? So you have to make a decision. You have to be brave either way here, right? To either say, you know what, I'm done, or no, I'm going to believe the macro. I'm going to believe the forward-looking indicators, and I'm going to stay in my trades. At the moment, I'm staying in them, but look, you have to really concentrate at this point in the cycle. If you haven't got the crypto course, I'll leave a 20% discount down below. If you type BTC at checkout, you can get that. You can watch these videos, all updates for free forever for existing users. If you trade crypto as well, Bybit will give you a deposit bonus by the link below in the description. Anything you deposit, you can go ahead and trade with that bonus there. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.